Hello and welcome to Commodity Culture, where our goal is to make you a better investor in the commodity space. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's episode is sponsored by ARC Silver Gold Osmium. They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARC SGO and owner Ian Everard. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARC Silver. He is a straight shooter. So go to arcsgo.com and contact Ian Everard today at 307 264 9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And today's guest was named one of the legendary technical analysts by Forbes, and his unique cycle-based system has been employed at Merrill Lynch and Goldman Sachs. He is the founder of Charles Nenner Research Center. We're going to be talking about market cycles as well as how they apply to commodities in particular. It's Dr. Charles Nenner. Thank you so much for coming on the show.
It's great to be here.
I want to start with your background a little bit because it's very fascinating. You were a surgeon and a psychiatrist, and you wanted to know what caused a peak in patient admission at certain times. Talk to us about that and your thought process there and how that led you to creating your system that you've now applied to the world of finance and investing.
Well, we knew and everybody knows that when it's full moon, a lot of women give birth. The difference between an economist and a doctor, especially sort of at Goldman Sachs, is if you need the red pill to recover, you get the red pill, even if I don't know how it works. An economist says, unless I get it, I'm not going to use this data because I don't understand. So we don't understand why with the full moon, you have a lot of women coming in with rebirth, but you have to make sure you have enough doctors available. So I joined in psychiatry. I joined in an experiment seeing if people became psychotic all over the world at the same time, which they did. So then actually you find a cycle. And later I went with a friend to New York and I watched CNBC and they said, the stock goes up, the stock goes down. I said, I don't really get it. Let me look into it. Maybe it also cycles over there. And I started developing it by hand in the 80s. Later, the computer came and the system hasn't changed for the last, how long is it already? 40, 45 years. And so my last thing I did was doing the timing for the prop traders in Goldman Sachs. The prop trading, that means the own investment Goldman Sachs, plus the big hedge funds. And after Obama was afraid that we took too much risk and they didn't allow it anymore, a lot of partners left. And I started my own firm doing the same thing, which means is predict the market moves, how high they go, how low they go, and when they start and when they stop, based on, and here comes the problem, that they don't move at random. Because if something moves at random, you can't actually predict it. So that's the philosophy. And if you think that you're in control, the world is in control, you will never find the underlying mathematics because you're not looking for the right thing to work. Only if you say, listen, if I want to predict something, it can only be done if things don't move at random. So let's start with it doesn't move at random, because if it moves at random, I don't know any prediction for the future. And that has been going on for a long time. And the firm exists already almost 20 years. A lot of big clients, even banks and institutions, and there were even governments involved. So that's what I've been doing lately.
That is very fascinating. I do want to kind of take that lens of cycles through which you see the market and apply it to your average retail investor, because obviously there's the theory out there that it's time in the market, not timing the market, and that the story goes nobody can time the market. So you should just buy quality companies, or for many people, just buy an index fund, hold on to them for the long run. For your average investor out there, does that hold true today, or is there a way for investors to actually use these sorts of cycle-based systems to to time the market, so to speak, to know when the best entry and exit points are?
Well, first of all, it's a fool's game. I don't know how this investment community got people convinced that you cannot do it. I mean, they cannot do it. And if they say, I cannot do it, you might go to somebody else who knows how to do it. So, how do you stifle the competition? By saying nobody knows it. So, you see people on television, where do you think the economy is going? Well, I think, but actually, nobody knows. How does he know nobody knows? They just pay attention. People say nobody knows because the anchors don't know, and the whole philosophy is nobody knows. And you see at Goldman Sachs, we did great with a lot of money in the market, predict the market moves. And the hedge funds and the real knowledgeable investors know there's much more to know than we don't know. So what happens to a person who wants to invest? He goes to an advisor. He says, "Let's do it for the long run." Why? Because he gets the clients, and if they lose money after 2 years, that's okay. We're there for the next 10 years, so they continue to be his client. So it's a fool's game, and people continue to listen to the media and the pundits what they should do. Now, Mr. Buffett said, "I never saw a very rich economic journalist." So that speaks for itself, but they still listen to what the economic journalist is going to say about the markets.
And when it comes to determining, let's say, entry and exit points, do you use that to look at individual securities? Do you use that to look at sectors as a whole? How do you use these cycles to predict the movements of markets? Is it individual stocks, full sectors, the whole market in general? Fill us in there.
Maybe understand if things don't move at random, people neutralize each other out. If you have a stock that's owned by two people, it's very hard to predict what those two people are going to do. If it's owned by a million people, they neutralize each other, and the psychology overrules, and then you can predict what they're going to do. So mostly we work with the indices because we want to have a lot of people invested, and all the currencies and the bond markets, of course, the euro currencies, gold, silver. And if we get a request, we look at certain stocks. So let's say you want to buy IBM, you do fundamental analysis, and you say, I think IBM is going to be okay. Now you can buy IBM and wait for half a year until other people agree with you until it goes up. So what we will do for you is, as you know, the cycle bottoms on this and this week, and then you buy, and we also give you the level at what when to buy, and we also give you the level and the date of the top. So it becomes a pure, not emotional investing.
And so, are there events that can occur? Obviously, things can come into play in terms of management making poor decisions in a company. Just one random example: there's a uranium company right now, NextGen Energy, and this isn't anything about NextGen. It's just a very fresh example in my mind, so I wanted to bring it up. And they recently did a deal to buy physical uranium. The deal was not widely liked by shareholders, and so the stock sold off. How do you look at those sort of events when you're examining individual equities or sectors? Is that just kind of a blip on the radar? You're looking more at the cyclicality over a longer term. Can poor decisions by management, kind of result in a different outcome than you had originally anticipated?
Well, first of all, we have also intraday surfers. So you get the craziest thing that we say this morning at 9:30, the S&P starts going up, goes up so and so many points until 10 past 2, and then we sell out. So you can do it intraday also. By coincidence, today I was working uranium because some very big hedge funds were selling the ETFs on uranium. So that doesn't look good just for people who are interested. Now, let me give you an example, then you understand how it works. Let's say you and I own IBM and we bought it at 100. And IBM goes to 150, but now the numbers come out. If the numbers are great, IBM goes up. And the Wall Street Journal will write, people poured in buying IBM because they're doing great. But if the cycle is down, the numbers are still great, but IBM has to go down, right? According to the cycle. So what does the Wall Street Journal say? People took profit because they don't think they do better next year. So even if you know the facts, if you know the interpretation of the facts, so a management can make a mistake, but you can say, okay, they're going to get over it, it's going to be better if the cycle is up. And if the cycle is down, it's like a catastrophe. So instead of putting all your effort into to figure out why, give you the other example. Maybe you know and also forgets his name. The guy who wrote about the Black Swan theory. So the Black Swan
Yeah.
theory, what's his name? I forgot always.
Nassim Taleb, I believe.
Something like that.
Yeah.
So he writes there can be events that nobody can predict. And then the market sells off. So people are putting in billions to figure out with the team what can lead to it. But we don't have to know what leads to it. We only have to know when it comes. But since the other side doesn't know when it happens, they only can look for why it's going to happen. And it's very hard. I used to teach at Goldman, and we had all these PhDs from Harvard, and they all read the same books and they all have the same exams. And it's very hard for them to approach the market in a different way. So they're all looking for the more news I have, but you don't know how the market is going to react. So all the news actually doesn't overrule the cycles.
Very interesting. Talk to us about uranium. You just said you think it's not in a good place right now. Could you expand on that for us?
Not very much. Somebody asked me to build the cycles. They have a big position in ETFs, and it says it doesn't look good, and I wouldn't stay long. So of course I don't know why. It's one of the first times I think 20 years ago I looked at uranium. I never look at it. Uh, so I happened to look at it today, and it didn't look too good.
Okay, interesting. Well, I do want to continue the discussion on commodities and talk about gold and silver. What are you seeing when it comes to the precious metals? Um, do you see gold and silver kind of moving together, moving in tandem up ahead? Is there a divergence you see occurring between those two metals? And are we in a generally bullish trend at the moment?
Well, general bullish trend is difficult to say because would you say that the Dow Jones is in a bullish trend from the 1950s? I mean, where do you start calling it a bullish trend? We had a price target of 2,500, it almost reached 2,500 on the June contract, and we went out. These are very cyclical things. You have to watch exactly what the cycle says and what the price level says. So we've been trading this for 100, $200 usually up and down. Going to be the long-term bull market, but there are going to be big setbacks. And I just warn people who says I'm in there for the long run that it's nicely to say, but my experience is that if it goes down too much, you sell out anyway and you forget it. And then we give a bicycle, but now you're afraid to get in because you lost so much money. So I don't believe in these long-term investments. The best thing is maybe, we have this charlesnenner.com website. You can get 30 days for free. You don't even show a credit card. See how we do it. It's nothing to do with the news. We'll show you exactly a printout for the computer what the cycle says, which day is bottoming, which day is topping, how high it goes, how low it goes, and then you may get used to looking at markets like the professionals do.
And your thoughts on silver as well?
Silver is staying behind, and it still seems it's going to stay behind. I tell you honestly, I don't know why. Usually, when you get super speculation by the small investors, then silver will catch up and do better than gold. But for the moment, it's still the big players who play the metals.
And talk to us about your general time horizon. You say you're not a believer in long-term investing. So are you basically buying and holding for as long as the information regarding the cycle tells you, and then you know when to exit? How long is that generally? Does it vary? Do you ever hold on to anything for a very long time? What's your general time horizon?
That's difficult to say because we got difficult people. We got pension funds, we got banks, we got small investors who play for 200 S&P points. These days, that's going to be done in 1 week. But if you look at the track record, if you go to the website, you see like we're up always 100, 150% on every assets we do. So even if it's not so long term, uh, as long as you follow the cycles, it's very easy to make some money in the markets. If you hold for the long run, maybe you sleep better if it's not in your character to do some short term investing, but it goes very, very slowly.
Right. Now, let's shift over to the oil and gas sector. Do you think we're going to see prices above 100 for WTI crude again anytime soon? Do you see natural gas breaking out of its current consolidation that's been going on for over a year? What's your thoughts on energy?
Well, we still have a downside target almost reached of $74 on the crude. For the moment, I don't see it going there. It's going to go there. I don't have it ready. It's on the website. What the weekly cycle does, it still has to bottom. It's still not up. So it probably can take till the end of the year or next year. We're going to see it. We're going to see a pickup inflation again in a couple of weeks. We always watch the Goldman Sachs Commodity Index. And so I don't know why people are still surprised about the numbers coming out by inflation, because if you watch that cycle, you know if the inflation is going to pick up or not. So we're going to see that crude, but not for a while.
And in terms of inflation, what are you seeing there? Do you think we're going to see persistent inflation moving forward? Are we going to see deflation? You hear a lot of different opinions from different people. I've heard a lot of people compare the current cycle to the 1970s era of stagflation as well. Where do you stand on inflation and where it's headed?
1970s is a nice year to talk about, because there is a 30-year cycle of inflation. 30 years up, 30 years down. Um, so now it's up again for the next, I don't know, I have to calculate, the next 20, 25 years. We're going to have high inflation longer term. Doesn't mean every week is going up. And of course, it goes in waves. So we saw the first wave, then it's tempering off, and soon we're going up again. Um, that's the cycle. You can't do anything about it.
Now, when we look out to the global economy, do you look at emerging markets? Do you look at non US equities? Are there any countries, perhaps outside of the US, that you see potentially showing strength up ahead?
Well, here we go about the period. We just a couple of hours ago, I discussed this on television with somebody. We're looking for a major high, like in the 1929s. No joke. And before some crashes, I have always said, investors are still more afraid to lose the next 3-4% than to lose the next 40%. Um, there are a lot of reasons why things are not well. The economy is going down. If you look at the Buffett indicator, for people who don't know, Mr. Buffett created an indicator that takes the capitalization of stocks against the GDP, and it's one of the highest it's ever been. For more simple reasons, the price earnings is very high, and if the GDP goes down and interest rates, for the moment, I don't see the Fed making any improvement in the interest rates. So everybody is just hysterical about it until the cycle tops. Now, if you take fundamentally what's going on, the big deficit that we have, that it says in 1 or 2 years, we're going to use 50% of the GDP only to pay back the interest. If you look at the problems that the dollar is going to have soon, because the BRIC countries are going to be anti-dollar. If you have the problem with the dollar after that, if they make a digital dollar, so everybody runs out of the dollar, there's a lot fundamentally that shows you things are wrong. But like I said, we said with IBM, as long as the cycle is up, people disregard it. If the cycle is down, the smallest thing can bring the market down.
And how do you apply your view through cycles of political and geopolitical events, the global conflict we're seeing emerge, the kind of situation with politics in the US and in many countries around the world seems to be kind of chaotic at the moment, and people can't quite wrap their heads around a lot of the extreme ideology being pushed by a lot of these politicians. Is this all attributable to cycles as well?
I remember my professor in psychiatry used to say, don't call a patient crazy, say, I don't understand him. So let's not say, of course it looks crazy, but we don't understand it. With the cycles, we understand, because I've been on television like 20 years ago already, predicting when the war cycles are turning up. And of course, we see the wars everywhere that's going on. The social unrest is a 60-year cycle. The change of the century, 1900, was a big upheaval. Then the 1960s, which you look young, but you probably still remember. And 6 years later, look, we have the same student protest, and they think it comes from them, but it's the cycle who pushes these feelings, and the crowd just runs behind it. So we're in for a very difficult period. Now, what happens with the Democrats and Republicans? Then you have to study what interest rates do, what the cycle is, when this party wins, when that party wins, and there's a lot to say about it. As a different subject, we can talk about it another time.
Now, you covered a very interesting topic on an interview from a couple years back that I think is worth touching on here, and that is inflationary cycles and geopolitics. Well, we're on that subject. So what's the connection between those two things?
Well, of course, one of the big movers also in the U.S. is the people with the middle income. They can go each way, and they're being killed by the inflation. So you don't have a quiet political environment, and inflation goes up. And then what happens is what you see now with the Biden administration, then you keep everybody happy. So you take away the student loans, you take away this, and you give billions away in order, to gain the votes, and that leads to more inflation. So that actually goes together. I don't remember exactly the analysis I had then, but it's very clearly that if you look at the periods of high inflation, there's a lot of unrest and wars going on.
Yeah, absolutely. Do you expect global conflict to continue for the foreseeable future? When does this cycle turn? You hear a lot of different theories. Neil Howe's the fourth turning, and a lot of people pointing to a similar idea that these are kind of cycles that humanity goes through. From the lens which you're viewing things, where does this all end? And does something good come out of it on the other side?
That's a hard one. It depends on what you define as a good thing coming out of it. I personally don't think humanity is getting much better than it was before. Plato used to say, if you educate people better, they become better people. I think we proved that that's not really the case. And now we have more information, and it's still not better people. Um, we have to see. The cycles are up for the wars in another 7, 8 years, and we got this big crash coming on, which is going to be a terrible situation. Um, if that's going to be because of a war or because of an economic crisis, that I don't know, but we know it's coming, and we'll find out why. Just as you find it maybe interesting that before the virus started, the coronavirus, we were in 100% cash, and I had no idea. But all the cycles were topping. If you one more, which people don't really know, is they think the market came down because 9/11, right? The attack.
Yeah.
So I challenge you, you take a chart of, let's say, the DAX or the FTSE, London market, German market. You see it was down for 12, 13 days. It was down for one more day after 9/11, and it went up. Interesting question, right? I remember the FBI then thought that the Middle East people went short because they knew it was coming because they couldn't understand that. So all these combinations that they make the same thing about the '87 crash. We have an interesting chart that I sent out before the crash in '87, and it shows the 1929 crash as an overlay of the '87 crash, and it was 100% correlation, exactly the same thing. So we saw it coming. So there's a lot to learn and a lot to understand before we can make actually a decision what to invest in. But it's not news driven. The news comes afterwards. So now you get the question that people sometimes ask me. Let's say the market goes up, and let's say, God forbid, Biden gets killed. What will the market do? Will it still go up or down? And the interesting question is, hold to your seat. When the market is going up, Biden cannot get killed because then the market has to come down, but the market has to go up. So he cannot get killed. He can only get killed when the market is going to crash. So what happens is he gets killed and the market crashes, and then say, oh, that's why the market crashes, and that's why the investor never learns. So if you look at our research, if we tell you in advance what's going to happen, and then something triggers it, then you start realizing that it's the other way around.
So in this sense, the cycles themselves, one can think of them as a force of nature, or how can one wrap their head around this? Because I totally get what you're saying. It's very fascinating, and humans always want to put some sort of rational label on the reason why something is happening. When you're saying it's kind of already preordained in many ways, and the events themselves are kind of the aftermath of the cycle turning. It's not the other way around. Are cycles a natural force then?
I'm still not sure. We also do, let's say, soya beans, corn, wheat. I have no idea what the weather is going to be. Well, we can predict the cycle for the next 6 months, for the next 2 days. That's very strange. And I don't really have the answer, but I'm in your camp. It's a law of nature. Like Newton saw when the apple falls down, it took 2,000 years to figure out there's a theory behind it. It doesn't happen random. So here also in the creation that God made to the world, there's a pattern. Now, if you believe there's no pattern, you don't find it. If you believe everything is the creation, then you're going to look for it, and you'll be surprised what you can come up with.
Yeah. That is, yeah, that is a very interesting mental exercise. It almost is related to the fabric of existence and reality itself. And I find it very intriguing that you yourself are saying, well, actually, we don't really know. We just know that these cycles are there, and we can capitalize on them. So that's very fascinating.
As an example, when the coronavirus started,
Yeah.
I showed them the 100-year cycle. There's a 100-year cycle of epidemic catastrophes. Nobody works with it because you cannot grasp how it's possible that exactly after 100 years you have another big sickness coming up. But for instance, 1918 was the flu, the Asian flu, and 100 years. So even if people see it, they don't believe it. So I always, for 30 years, I get what happens if the cycles don't work anymore. I says, for now they're working. Why would it not work? If they don't work, we will stop it. But they're still working very nicely. It's a law of nature, like you said. You can't change it. Now, what's also a law of nature is very interesting. Is why certain people make money and certain people don't make money. And I give you an example. There's some people who miss trades because they just happened to be outside, or they just happened to the bathroom, or they were just on a flight, and it's always the same people. So it's just not in their future to do good trades. So I tell people, and maybe that's an idea for everybody, if you do a trade that we tell you to do or not, write down why you take it, why you don't take it. So you can learn from it. Because if you ask later, we told you gold goes up. Well, I didn't take it. Why? I don't remember. So for small traders, write down if there's a signal, why you take the signal, why you don't take the signal, and then you can improve yourself.
So, is there any space then for fundamental analysis? Should people be throwing out Ben Graham's The Intelligent Investor? Should people be ignoring the advice of people like Charlie Munger and Warren Buffett? People look to a lot of these value investors as almost gods in many ways, and that their word is law when it comes to the realm of investing. Should people be looking at PE ratios, price to sales, price to book, all of these different kind of metrics by which companies are evaluated? Is all of that useless? Is it all about the cycles, or is there a place for fundamental analysis?
In the Netherlands, I was advising Robeco. Now, maybe you put on Robeco is, I think, is one of the biggest pension funds in the world. And they publish twice a year, like 600 pages. So I asked them, why do we publish 600 pages? And the answer is that's what our clients want. We know it doesn't really mean something. That's what they want. Now, the people that you talk about the value investing don't think they don't know about cycles. They don't tell you that. They use total different methods, and they cover it up by price earnings and cash flows and whatever, because that doesn't really help you. But the example I gave about IBM, that even if you know what the what's going to happen, what the record's going to show, if they make profit or not, you still don't know if the stock goes up and down. So it's for you to decide if you want to spend your time on it. But the investing public for the last 100 years has been taught that this is important and this is what they want.
Right. Well, Dr. Nenner, this has been a fantastic conversation. You've given me so much to think about, so I hope we can do this again, because I want to draft up some more questions for you. For those who do want to learn more about what it is you do at the Charles Nenner Research Center, you mentioned you've got a website. People can have a free trial there. Could you talk to us more about that?
Yeah, so it says they go to charlesnenner.com, and you can subscribe if you want. The different subscription, one is daily, one is intraday. Intraday is a bit more expensive, but you can make a lot more money. It's very interesting. Then you get the intraday mail that says, we'll look at the euro. The euro goes up for the next day and a half. It goes up from 107.5, and it will reach 108.20, and then you go out. So, but for 30 days, you can sign up for free. Like I said, you don't have to even give a credit card. And even if you don't want to use it, take a look how the advanced traders and hedge funds and banks are investing, because I don't think most people have any idea how the professionals do it. So at least you have a taste how it can be done.
Yeah.
And then, of course, you can ask much more difficult questions to your financial advisor afterwards.
Yeah, yeah. Well, yeah, that sounds like a no-brainer. I'm gonna go do that myself, because I'm very fascinated by your methodology. Well, thank you once again, Dr. Nenner, for coming on and sharing your knowledge with the audience.
You're welcome, and we'll do it again.
And thank you for joining us today. This episode was brought to you by ARC Silver Gold Osmium. Visit their website at arcsgo.com for all of your precious metals needs and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.